The low inflation environment and the weak economic growth will likely boost chances of another repo rate cut. The Reserve Bank forecasts inflation to average 3.4% this year as demand remains low, exacerbated by the economic effects of COVID-19. Inflation is forecast to increase towards the midpoint of the target range next year.
We expect the Reserve Bank to reduce the repo rate by another 25 basis points for the simple reason that the second quarter GDP contraction was deeper than expected. As for the year as a whole have been revised lower, so the economy is weaker than we had initially expected. The other reason is that the Reserve Bank has been quite active this year in cutting interest rates. At the time of its July meeting, its quarterly projection model was pricing in or reflecting another 25 basis points of a cut, and we do expect that to be brought forward as we saw at the earlier meetings for this year.
The Reserve Bank has so far cut the repo rate by 300 basis points to 3.5%, cushioning indebted consumers and businesses against the effects of COVID-19 on the economy.
While there were expectations that interest rates would remain unchanged, market sentiment now appears to be shifting to one of an interest rate cut. And of course, another 25 basis point cut in interest rates would provide relief to those who are indebted, not providing as significant a boost, however, to economic activity itself. Nevertheless, with the United States meeting this week and likely expected to also show a very dovish outlook, and of course keeping US interest rates lower for longer and improving the length of quantitative easing, that of course as well would also support South Africa taking a more dovish stance. So I think that currently we're facing a fairly undecided view, but we are seeing the money market rates increasingly factor in the possibility of a cut. So while we have had an unchanged stance from our interest rate forecast, it now seems as though there may be some leaning towards a cut.
The bank will likely revise downward GDP expectations from the 7.3% contraction it forecasted in July. Duras Safagomosi, SABC News, Johannesburg.